All right, Maximus Analysis here for July 21st, 2015. And we just got a small sell signal into today. So again, the ES is probably the mid-level of what's going on good. Regarding the indexes, we spoke yesterday and said that the YM was the one that really didn't look that good, and it kind of played itself out. And again, what we want to see is a hold of this level, this 18,000 level. If we're bullseye, we want it to be recaptured. I'm trying to get this thing to damn work properly. But you can see that we're still in the middle of the chop. So again, if we kind of, take things really, just basic and say, okay, we are tagging 50% of this previous downswing, and we need to hold this previous upswing. We need to hold a 700 level. That's what we got going on. NQ, again, best looking one out of the bunch. Hasn't, it's just very extended, but again, I would not be shorting this one at all. A lot of the names are looking really, really good. But again, we just want to make sure that we're understanding that the YM is not looking good. The ES is okay. Again, the ES, I think the sell was around 2012. And it got to a low of, what was it today? It was 2108. So again, we still have not passed the chop, which is around a 2030 area. Market just closed. And we'll see what happens. Again, with the YM, we have to be very cautious because Apple's earnings are... So again, if it crushes earnings, that's good. But it's all on how things... react. So it could crush earnings but not meet expectations. That's why we're going to mess with earnings too much. So with that being said, let's look at Apple, and we can see that pretty much it gave an engulfing at this prior level. But something to be said, that this has probably been a great option selling opportunity, because this is the last earnings. So again, let's put this in perspective. This was the last time it was earnings. This was January, March, April, and April 28th, and it hasn't moved. I mean, so if you've been holding this, hopefully you've been selling premium to make some money, but just to hold, again, unless you're looking more on a long-term chart like a weekly, which is fine. But again, we still want this week to pan out pretty good, because without all this stuff, okay, if we took all this stuff off, which we can right now, right? Even on the weekly, we're just like, oh boy, okay, let's make sure that we see this price action continue to the upside. Okay, so that's probably what we want to see definitely today. And I don't know what's going to happen right now. Again, this could be all over the place. Again, it's shot all the way up and to 132, and now it's already back down to 130. So who knows what the hell is going to happen when they announce. But again, I don't try to really play that game, because it's just, to me, it's just a losing game, quite honestly. So again, Google, not shorting this one at all. Again, it would be a very, very tough short right now after such a, let's say it's moved up $150. $150. Okay, so when we start looking at percentages to say, listen, this is a hell of a move, and people have gotten it. Congratulations, 31%, 30.5%. It's going to be it's going to expect some pullback, but just be careful shorting it, because you don't want to be the first out the foxhole doing that. Netflix looked okay. Nothing too bad here. Again, there's nothing bad about that name to look at. Amazon looks okay. Again, Tesla got really downgraded after hours and got crushed, actually, for like $14+ to the downside. So that one really didn't look that good. And you had a price line that, again, okay, actually right here. So it broke above, gave us a little dip and broke above. So again, we'll see how this one plays out. Crude continues to look like it's going to go down Chinatown. So that continues to look, and again, I'm not bullish at all this name, and I've been talking about it, and trust me, I've been having the battle when it was about $64. Everybody and their mother was telling me how I was wrong, and and it's not a little jab. Maybe it's a little jab to those guys, but again, it's more to just teach, and this is what my channel is more about, is just to teach, to say, okay, where are we within the trend? And right now we might be wave 4 going into wave 5. So we have 1, 2, 3, 4, which is longer than 2, going down. And again, I don't want to be definitely don't want to be a Elliott wave analyst is what we used to call them, because they just would try to get waves out of everything, even when it was just a choppy situation. Got bonds moved up a little bit. Let me move this. Bonds moved up a little bit, and you also had the dollar again still holding these bull pivots. So again, if it starts ramping up, this is all of what's been giving gold and oil its big problem. So you got GDX and you got gold continuing to look down. Again, it's in a downtrend, and this is what downtrending stocks or commodities or whatever hell you want to call it, forex, whatever, trade the chart. It's gold. It can't go well. Guess what? If I put this, if this was Apple, what would you say? Well, let me not use Apple, because some people say, oh, buy, because Apple's so cheap now. But again, if it was just a common name like Boeing, would you say Boeing is crushed? Hell yeah, you would say Boeing is crushed. I'm going to put the chart in now, and right now you say, okay, Boeing's looking okay. Might even see some upside potential here. You say, shoot, it went down, touch this, and let's see if it could break above this high and continue to go higher. But again, I'm just using these examples to say, okay, trade the chart. That's all that I'm using. Okay, earnings I really don't mess with, because it can be very gappy, and plus the options as far as premiums and stuff like that can be really shitty. I mean, they can run it up and suck the IV out, and you don't know where to go. Even if direction is right, sometimes it can't. That's probably where the weekly is probably really playing well if you're going to do a directional play. But we'll see what goes on tomorrow, and we'll see if the YM is able to recover. Take care.